Hello everyone, a very good morning, good afternoon and good evening to all of you. This is your host Vaibhav. In today's session of JForex Indicators Explained, we will be looking at one interesting formation named as dark cloud cover. From the name, you can make an informed guess that this is a formation which is going to deal with the bearish situations, bearish reversal. And since most of the investors think that when the markets turn bearish, it is dark omen, maybe because of that, the name might have been given for this formation as dark cloud cover. So let us now head to the JForex for the newly released trading platform from the Dukascopy Bank SA. This is the light crude oil chart, and let us see if we can find this dark cloud cover on this chart, or else we can always change the instrument and go to the most used instrument, that is Euro USD. Let me look for one example so that I can easily explain to you the formation, its concept, its utility, and some of the representative examples. But do keep in mind that this is not a frequently forming pattern, because it involves some sort of gap of open and then the reversal from that higher level. It is going to be a rare formation, and that is what we are observing on this chart, as we are unable to spot even one example in this search. Let me change to another instrument. Maybe in equity indices we will have better luck, hopefully. All right, we got it. Here comes our example. Let me enlarge it. It forms usually during the bullish trend. When we have the underlying momentum on the bullish side, there will be this continuous rise, and then after a substantial price rise, if we see that there is a opening price which is higher compared to the prior candle's closing value, which needs to have closed higher compared to the opening price. So its opening price needs to be less, and then it should have gone on to close higher. Then in the subsequent candle, the opening price needs to be higher than the closing price of the prior candle, so there should be gap of open in the subsequent period, but it shouldn't be able to sustain the prior momentum and should go on to close below the midpoint of the first candle. So there is a two candle formation in which there is a reversal in the second candle from the price moves which was observed in the first candle. So the requirement is simple to understand. We need substantial price rise in the first candle with it having a real candle body with a closing value substantially higher compared to the opening price. Then in the second candle, we need the opening price to be greater than the closing price. As I said, the gap of open is required. Then from that price level, there should be reversal, and eventually the price should go on to close below the midpoint of the first candle, and that confirms the fact that selling pressure is emerging, even though the prior trend has been bullish, prior trend has been upward, and maybe this is the sign of a possible reversal. The momentum might be shifting now, and these are the early signs of a possible reversal imminent in the subsequent period. So that is what these formation indicates, and that's why the name is dark cloud cover. That means the dark clouds are forming in the horizon, and a reversal can be expected. It might happen immediately, or it might take some time, or even in some cases it might be a false signaling, and it might not happen, and the prior trend, the uptrend, might continue for a good enough amount of time, as is the case this time around. Even though we saw this bearish formation happening, the dark cloud cover taking shape, Eventually, the price continued to move higher and higher. There was not much of an decline, even in this formation. Immediately after the formation, in the third candle, we saw the rise again, and it didn't really look back. Most of the time, the price hovered higher, and then it again went on to make a fresh swing high. Let us look for another example. So that underlies the need to have a optimum risk reward ratio in place, and to make sure that if we happen to get the trade wrong, we shouldn't be losing too much money. And that is going to be a key criterion with this formation also. That should be the case with almost any formation, because not all the time we are going to get the trade right. So if we happen to get the trade wrong, we should be in a position to maximize our profit and minimize our losses. That is important requirement. And only if we are able to sustain the account equity, even though if we get the trade wrong, we shouldn't be losing too much amount of money. And here we have gone back to January, but only one instance has been found. So let me change the instrument. And like crude oil, we have already considered. Let's consider currencies, but in currencies it is going to be harder to spot, because the nature of the currency market is such that we usually don't really get gap up and gap down opening. Beside weekend, on weekends it does happen sometimes. No such luck in the euro USD so far. Maybe on the lower time frame we might come across a pattern. Let's try out 15 minutes. On 15 minutes maybe we will be able to figure out. Okay, here it comes. So in this case, there was upward momentum. The price continued to move higher and higher. Eventually, we saw that the opening price for this particular candle is higher than the closing price of this green candle. And then the price goes on to close below the midpoint of the real body of this candle. So that means there was substantial selling pressure for that particular candle period. And here also we see that it wasn't really sustained. In the very next candle the price reversed higher and went on to close almost identical level where it had started in this candle. And this time also we would have ended up in loss if we had initiated the trade using this formation. So we have seen two instances of these formation dark cloud cover, and on both the occasions the trade would have ended up in loss. So not all the time the formation is going to generate the profitable trade entries. Sometimes profit, sometimes losses, and that is the part and parcel of trading. And only thing we can do is to try to minimize the losses with keeping the stop losses sharp enough that we don't lose too much money. Let's try out a different instrument. Maybe USD JPY might offer us a better example, better in the sense formation as well as outcome. For the USD JPY, no, no example spotted so far. Okay, here it comes. So this is one example. In this case also, unfortunately, the price continued to rise higher and higher, and it didn't really reverse immediately. But after the price is stabilized, and there was sustained candle periods of these price reversal, and eventually the price did start to decline, and it went on to decline around 30 to 40 pips. So this is one example where if you had initiated the trade after price stabilized, you would have indeed made money. And I think that is also essential because this formation takes shape when the trend is up, and in a single candle you can't really be confident that the price is now reverse going to reverse from that very instant. So as the dark clouds are forming, if we allow more time for these dark clouds to gather, and then maybe if cloud cover gets dark enough, it might precipitate a downfall for the underlying instrument. So that is the takeaway, that we should not only take into consideration these two candles where the price reversal needs to be seen for the confirmation, but even after this pattern has been recognized on the chart, we should also pay attention to the price formation of next few candles. And when we have additional confirmation in place, maybe if we initiate the trade after further confirmation, after additional factors have been also supportive, have developed in a such a way that now the whole formation is looking supportive of our trade, we can go on to initiate the trade. So that is what this instance is telling us. Let me look for another example on the hourly time frame, and then we will see what we can do in terms of editing. No, I think we will have to go back to that only, that formation only. And it is yet to be found. Okay, here it comes. Now let us see what we can do in terms of editing. For input, we can vary this penetration value. We can increase or decrease it. So that is one option provided on the chart. Let me try out different combination. Let's see what happens when we take one. Okay, it has evaporated. Two, nothing. Three, because the rare formation, I think if we try out higher and higher values, it will even become difficult to spot it. So because of that, I think zero is a good option. Output, the color combination can be opted as per your choice. You can vary this color combination. Now the trend up, trend down, both these color combinations can be changed. If you feel that maybe yellow is going to look better, you can do that as well. Even styling, the bracketing option can be varied. We can go for this bracket style, or we can fully shade the candle in color of our choice. So all these options are given to you. Transparency factor, if you want to increase the transparency, you can do that. So the shading for this bracket will become much more transparent, and it will look a lot less prominent on the chart. Advanced, recalculate on new candle only. You can opt for this option, but it is not really going to make much of a difference since these are two candle formation. So there is a highlight time period zone as well as the recalculate on new candle are not going to make much of a difference. Calculate from custom data, this has been disabled. If you want this formation to be shown whenever you change the chart's candle period, you have to opt in for this option, else you have to specify on which particular candle period you want this pattern to be recognized on the chart. So if you specify here from these options given to you, only on those specific candle periods this formation will appear. So now I am reverting back to show indicator on all the periods. So that's all from my side for today's session. If any of you have any query or any idea to share about this formation, its concepts, its utility, and we can always take forward the discussion to figure out multiple ways to use this indicator in a profitable manner. So do join in and give me the feedback, and we will try to take the discussion forward. See you next time around. Till then, goodbye.